Hello everybody, I hope all of you are doing really well. My name is Siddhant Mehta and welcome you all to Toofan batch. This is part 2 of chapter number 6 and let's understand what is financial modeling. So financial modeling is a process where you predict the future financial performance of the company in upcoming years. Here you predict the revenue of the company, here you predict the cash flow the company is able to generate and also how much cost they are able to incur. One of the reasons why you do all these calculations is to attract investors, to tell them that this is the growth in my company and if you invest in my company right now, this is the potential return which you can earn. Now let's understand some basic of financial modelings that every entrepreneur and their core team must know about. First is revenue forecasting. Every entrepreneur and their core team should know how to predict future income based on market analysis, sale projections and pricing strategies, because this will help them to set some financial goals. Once they forecast the revenue, they must be able to estimate how much cost they have to incur to achieve that revenue. What will be the production cost, what will be the marketing cost, how much salary they have to pay. Then third one is cash flow projections. Here they have to forecast cash inflow and also the cash outflow they are going to have in upcoming years to ensure that there is a liquidity which is maintained throughout these projection years, and also if there are situation of cash shortage, then how they are going to mitigate it. Fourth one is profitability analysis. Here they have to calculate the profits of the company and have to look for the areas where they need any improvement. Then the fifth one is scenario analysis. Here they will calculate the worth of a company, the value of the company in three different scenarios, that is best case, base case and worst case. In best case scenario, this will be the situation and this will be the value of a company. In the worst case scenario, this will be the situation of a company and this will be the value of a company. So if you are able to understand what risk you are going to face in the worst case scenario, then try to work on it from now only, because in the worst case scenario अगर ये risk आ गई बाद में, तो अगर आपने उस पर पहले से ही काम किया है तो आप उसको बाद में फेस नहीं करोगे in the worst case scenario. Then valuation modeling. Estimate the value of your startup based on revenue projections, market size and growth potential. Why you are doing it? To attract investors. And then prepare the financial statements like income statements, balance sheet and cash flow statement to monitor the financial health of the company. Also you have to submit these statements to the investors from time to time to tell the financial performance of your company. Now currently in the market there are some modern tools for financial analysis which do all these activities. First one is for accounting software, there is QuickBooks, FreshBooks, which automate the bookkeeping process, track expenses and also manages invoices. Second, there is financial planning and analysis software, which helps at the time of creating financial model, which helps at the time of budgeting, forecasting and also at the time of scenario analysis. Then there are business intelligence tool which provide you a real-time dashboard which you can use to visualize and analyze financial data. Then there are some financial dashboards which provides a real-time visual overview of key financial metrics like cash flow, profitability and revenue. Then there are forecasting and modeling tools which will help you to predict future outcomes using predictive analytics and machine learning. Then there are expense management software and also financial analytics software which help you to understand the trend analysis and also to understand ratio analysis. All these modern softwares are available. अभी कैसा हो रहा है, ICAI कैसे क्वेश्चन पूछ रहा है कि पावर BI कौन सा टूल है, फिर एडेप्टिव इनसाइट्स कौन सा सॉफ्टवेयर है, ऐसे बेसिक सवाल पूछ रहा है. तो एक बार ये एग्जांपल्स है ना, इसको स्किप मत करना, अच्छे से एक बार क्विकली ओवरव्यू कर लेना. देन देयर आर सम इंडियन स्पेसिफिक टेक टूल्स लाइक टैली, जोहो, क्लियर टैक्स, रेजर पे, क्विको, सही GST and प्रॉफिट बुक्स. Now let's understand how to approach investor. Now startup can approach investor by participating or attending startup events and conferences. These are the event and conferences which are arranged by government institutions or external associations. We have understood this in chapter number 5. Then they can also apply to Indian startup accelerators and incubators, because they are the one who arrange networking events for the startup where they can meet with their potential investor. Third is taking the benefits of online platform. There are some online platforms for startup where they can create their bio and also investor will create their bio. Here startup will mention about their business, that this is their business, this is their business model, these are their competitive advantages. Also investor will create their bio and will mention that this is the sector in which he is currently interested in. He will mention about his experience in that sector. Also he will mention how much amount he usually invests. For example, he will mention 50 lakhs to 5 crores. So if this startup is interested in this investor, that कि यार ये investor का ना जो experience है वो मेरे sector से match होता है, इसका experience मुझे help करेगा business grow करने के लिए, तो वो ये investor को इस online platform पे search कर सकता है, उसको connect करके अपना idea pitch कर सकता है. Then seek introduction from local networks. There are some local networks formed by local entrepreneurs. Also there are some local associations. Try to be part of such local associations, and if there are any networking events arranged by such associations, take a part in it and search for your potential investor. Then craft a compelling pitch and pitch your idea to the investor by which they will believe in your vision. Now let's understand step by step guide to approach investor. First is to prepare your pitch. पहले pitch अपने prepare करो, और जो जो चीज़ें आपको mention करनी है आपका idea present करने के लिए, आपके business को attractive बनाने के लिए, वो उसमें mention कर दो. जैसे clearly define your business idea, highlight the problem you are going to solve, explain why your solution is better than your competitors. Then research about the investor. Identify investors who have experience in your industry and ensure that their interests align with your startup's value and vision. Then third is craft a compelling pitch deck. Pitch deck is nothing but the PPT, and what all things should be there in PPT we have already covered in previous chapter. Then reach out to the investor. How you can reach out to him? Send him a personalized email, or connect with him on LinkedIn, or connect with him on such online platforms. Take his time and pitch your idea to this investor. Then at the end mention what you are expecting from the investor. He will definitely have some follow-up questions. Answer that question, then you will negotiate for the valuation, and at the end close the deal with that investor. So this is how you will approach to the investor. Now let's understand what is term sheet. So term sheet is a non-binding document. Non-binding document means something which is not legally enforceable. So this is the term sheet which is issued by investor to the startup, mentioning that I will give you the investment, but these are my terms and conditions. If you are accepting it, then we will sign a agreement, and then I will give you the money. So term sheet includes all the terms and conditions which are imposed by investor to the startup. So this is the foundational document that outlines terms and conditions of the investment deal between startup and investor. Now let's understand what all components are there in term sheet. First, introduction. First, it will give you a brief overview of the parties involved. Then valuation and investment details. Here you will mention pre-money startup valuation, the funding amount to be raised, and also the post-money valuation of a startup. Then how this investment is structured. Define how the investments will be structured, whether it will be entirely equity or it will be entire debt or equity plus debt. And then the fourth condition is the founder vesting condition. This is the beautiful condition which investor can impose on startup. Now let's understand about a founder vesting clause with the help of one example. Here there is one company run by Amit and Neha. They are the founders of the company, and they have 50% stake in this company. They pitch their idea to the investor. He is ready to give his investment, but he wants 20% stake and has also one condition, and that condition is of founder vesting clause. Once he have 20% stake, they both have 40% stake, and with the help of founder vesting clause, he can put one restriction on them. He can say that Amit and Neha, you will be the owner of this 40% stake, but these shares will not be given it to you right now. These shares will be vested for 4 years. Here the vesting means founder will earn their shares slowly over time. Now for how many years these shares will be vested, how much percentage they will get in particular year, this will be decided between the founder members and with the investor, but investor has a right to put this clause in a term sheet. Now you must have two questions कि पहला ऐसा वो कर क्यों रहा है, why is putting founder vesting clause, and second, what is the benefit of it. First, the reason he is putting founder vesting clause in a term sheet is so that the founder should be committed throughout the years, throughout the future years. ऐसा हो सकता है कि इन्वेस्टर का 20% आने के बाद कंपनी का वैल्यूएशन बढ़े, कंपनी का वैल्यूएशन बढ़ गया तो ये भाई अपना फाउंडर 40% स्टेक बेच के चला गया. ऐसा ना हो, वो कमिटेड रहे थ्रू आउट द ईयर इन आयर. सो दैट्स वाई दे पुट अ फाउंडर वेस्टिंग क्लॉज. इससे फ़ायदा ये होता है कि अगर फाउंडर ने सोचा कि मैं कंपनी छोड़ के जाता हूँ एंड ही वॉन्ट्स टू लीव द कंपनी विद इन अ ईयर, देन ही विल नॉट गेट एनी शेयर्स ऑफ द कंपनी बिकॉज शेयर्स आर नॉट एट ऑल vested to you right now. If you try to leave the company within 1 year, then only 10% shares are vested and you can only get 10% shares of the company. If you try to leave the company in 2 years, then you will only get 20% of the company. अब ये 4 साल में लीगल ओनर अमित ही रहेगा 40% का, बट इफ दे वांट टू लीव दिस कंपनी अर्ली देन दे विल ओनली गेट पार्शियल शेयर्स। और दिस इज द बेनिफिट ऑफ फाउंडर वेस्टिंग क्लॉज। सो जो भी कंपनी के डॉक्यूमेंट्स रहते हैं ना, उसमें लिखा रहता है कि अमित, नेहा own the 40% stake of the company but subject to founder vesting clause. So this is the clause which investor can impose in term sheet. So founder vesting clause includes provision that ensures founders stay committed by setting a schedule over which their ownership stake vests. Then governance and control. If investor needs to have some decision making power, if investor wants an ability to influence major company decisions, then in what all areas he needs to have decision making power should be mentioned in governance and control. Then rights and protection. If investor wants to claim some specific rights, for example information right. So here if company wants to take any major decisions which will affect the investment value of a company or the percentage stake of the investor, then such information should be provided to the investor on priority basis before making that decision for safeguarding their interest. Then exit strategy. Outline the possible exit path for the investor and detail how this process will be distributed, and whether the company is thinking to launch an IPO or they are thinking about the merger. Then legal and regulatory consideration. Incorporate the clause for legal compliances, that once this investment is done, then as per the Companies Act, these are the compliance which are to be done by the company, and we will do this compliance. Also, if there is any dispute, how we will resolve this dispute, whether we will go to the mediation or arbitration. Then conditions precedent. Here list the condition that must be satisfied before the investment deal is finalized. For example, whether the due diligence is completed or not, then what all regulatory approvals is required to do this investment. All such conditions which should be done before this investment should be mentioned in condition precedent. And then expiration and binding nature. Here you have to state the validity period of term sheet. Now the term sheet is not valid till the infinity. There is some specific period till which it is valid, and till that period you have to sign the investor agreement. If investor agreement is not signed within this period, then both parties are free to walk away from this investment. Now once he mentioned all these conditions, these are the basic conditions, but if you want to add some more conditions in a term sheet, he can do it. So these conditions can be, first one is anti-dilutive provision. With the help of this provision, he is protecting himself, because if company issues new shares and that too at lower valuation in future funding rounds, then automatically the value of this investor will get decreased. So what all loss this investor will face because of such lower valuation will be compensated by the company to investor. So here he is protecting himself, but he is not restricting company to issue such new rounds at lower valuation. If company wants, they can do it, but what all loss which will be faced by these investors will be compensated by the company. Then liquidation preference. Here we will define the order in which shareholders will be paid at the time of liquidation. Then conversion right. Here we will outline the conditions for converting convertible securities into common equity. Then there is redemption rights. Here if company is not able to achieve the milestone for which they have raised the fund from the investor, then company will take back the shares from the investor at predetermined price. Allow investor to sell their shares back to the company at a set price after a period, providing an exit if milestones aren't achieved. Then information rights. Here the investor will have access to the financial and operational company's information to track the performance and make decision. Board representation. If investor has a right to appoint any board member, then it will be mentioned in board representation. Then founder restriction. Here if investor want to impose some conditions on founder, like they will not be able to accept clients on personal level, all the clients will be redirected towards the company, then he can mention this in founders restriction. Impose obligation like non-compete and non-solicitation clauses on founders to protect the company's interest. Then employee stock option pool. Here they will set aside a portion of a company's equity to offer incentives to employees and important team members. Then preemption rights. Here if existing shareholders want to buy more shares in new financing routes to maintain their ownership stake, then they can get this right in preemption right. And last is dispute resolution mechanism. Here they will define the method if there is any dispute, how they will resolve this dispute, whether they will go to the arbitration or they will have a mediation. ऑल सच कंडीशंस इन्वेस्टर कैन इम्पोज इन टर्म शीट. बट ये ऐसा नहीं होता है कि इन्वेस्टर ये हर एक कंडीशन टर्म शीट पर लिखता है. जैसे जैसे उसे लगे इस कंपनी के सामने हमने रखने चाहिए कंडीशंस, वैसे वो रखता है. फिर ये स्टार्टअप को अगर ये कंडीशंस एक्सेप्ट हो तो ही वो इन्वेस्टर एग्रीमेंट असाइन होता है इन स्टार्टअप एंड इन्वेस्टर. सो इन्वेस्टर एग्रीमेंट, ऑल्सो नोन एज शेयर होल्डर्स एग्रीमेंट और सब्सक्रिप्शन एग्रीमेंट, इज अ कॉम्प्रिहेंसिव डॉक्यूमेंट दैट गवर्न्स द रिलेशनशिप बिटवीन स्टार्टअप एंड इन्वेस्टर. And here in this investor agreement, we will mention all the conditions which were there in a term sheet and which are accepted by the startup. Key components of investor agreement are investment terms, rights and protection, governance structure, founder restriction, and exit strategy, which are there in term sheet and which are also accepted by startup. Now let's understand about equity dilution. So equity dilution occurs when a startup issue additional shares either through new financing round or employee stock option grants. This reduce the ownership percentage of existing shareholders. So here, if you are having 10% stake in a company, that means you have 10 shares out of 100 shares of a company. But company issue additional 100 shares. Now there are 200 shares in a company, but you only own 10 shares, which is a 5%. So here you can see company issued the additional shares which will reduce the ownership percentage of the existing shareholders. So if you want to manage such equity dilution, then following things should be done by the startup. First thing is negotiate favorable term. If startup is thinking to having a new financing round, then make sure that the terms in such financial rounds are in such a way which will minimize the dilutive effect on existing shareholders. Second is implement equity incentive plan strategically. ऐसा मत करो कि हर एम्प्लॉय को तुम ESOP प्लान में इन्वॉल्व कर रहे हो. ESOP प्लान में बस की मेंबर्स को इन्वॉल्व करो जिससे ज़्यादा स्टेक डाइल्यूट ना हो. Startups should carefully manage their equity incentive plan, balancing the need to attract and retain talent with impact on existing shareholders. Third thing is communicate transparently. If you are thinking of having a new financing round, if you are thinking to give ESOP to the employees, communicate it with the investors. Founders should communicate openly and transparently with existing shareholders about the company's fundraising activities and the potential impact on equity ownership. And the last one is focus on growth and value creation. Ultimately, if startup is prioritizing growth and value creation, as increased valuation will mitigate the dilutive effect on future financing rounds. Let me explain this to you with the help of this example. तो यहाँ पे 10% होल्ड करते थे एग्जिस्टिंग एक इन्वेस्टर जिसकी वैल्यू थी 1 करोड़ और कंपनी का वैल्यू था 10 करोड़. बट इक्विटी डाइल्यूट हुआ, न्यू फाइनेंसिंग राउंड की वजह से इक्विटी डाइल्यूट हुआ, एंड नाउ ही हैज़ 5% स्टेक इन द कंपनी. बट ऑल्सो द वैल्यूएशन ऑफ द कंपनी हैज़ बीन इंक्रीज फ्रॉम 10 करोड़ to 100 crore. So 5% in 100 crores is 5 crores. So here you can see company was focusing on their growth and the value creation, by which the increased valuation mitigate the dilutive effect of future financing rounds. So this was all about your equity dilution. Now let's understand science behind startup valuation. So here the valuation is called as an art and science. It is called as an art because here we have to make a lot of estimates, lot of assumptions, and how accurate your assumptions are will decide how precise is your valuation. That's why it is called as an art. And then it is called science because here you have to follow a structured process to derive conclusion. That's why it is called as an science. Then in Indian startup ecosystem, there are a lot of factors which influence the valuation of a company, which will increase or sometimes even decrease the valuation of a company. Let's understand these factors. So first one is market potential. If your startup is having a product which is serving to the bigger markets, also that market is growing at a rapid pace, then definitely you can increase the valuation of your startup. And how you can understand it? By understanding the size of a target market, by understanding the growth rate, by understanding the competition level. Second one is revenue and growth metrics. There is a strong revenue of your startup and also it is growing at a rapid pace. This revenue is better than your competitors, then definitely you can increase your valuation. And how you can understand it? By comparing the revenue figures, by understanding the customer acquisition cost, retention rates, and some key performance indicators. Third one is technology and innovation. If you have advanced technology with you, which is giving you the competitive advantage, then definitely increase your valuation. Now, advanced technology means if you're using AI, if you're using machine learning, blockchain, innovative tech solutions to be efficient, then these tech solutions will give you the competitive advantage and you can increase the valuation of your startup, and these things will also justify the increased valuation. And the fourth one is investor sentiment. If there is a positive sentiment around your industry, around your sector, if there is a positive market mood, then definitely you can increase the valuation. Whereas if there is a negative market mood, negative sentiment around your particular industry, then you also have to decrease your valuation. Then sector specific factors. If there is one company which is governed by one regulatory body, and that regulatory body specifically says that if you want to value this company, then you have to value with this process, then here you have to follow that sector specific guidance to value that particular company. Then global comparison. If there is one company which is working at global level and also having the same business like yours and also have the same growth like yours, so here you can value your company based upon the global company. For example, we will value that company, for example, we are valuing that company through revenue multiple. Okay, so that global company has this much of valuation at this much of revenue, then what will be the valuation of my company at this revenue? So here we are calculating the worth of my company based upon this global company through revenue multiple. अब ये कैलकुलेशन कैसे वगैरह होता है हम अभी इसमें नहीं जाएंगे, बट हमारे सिलेबस में इतना ही है तो हम उतना ही कवर करते हैं. So strong global comparability improves the valuation standing. Then stages of development. If my company is at early stage, then I will value that my company based upon what innovative idea I have. Then the market size of the company which I am currently targeting. And if my startup is at the growth stage, then I will value my startup based upon revenues and some other factors. Also, if there is a clear exit path which is given to the investor by the startup, then definitely you can increase the valuation of your company, because there are a lot of investors who are searching for such startup which gives the clear exit path. Now let's understand our last concept for the day, that is some aspect that entrepreneurs can refer while negotiating their startup valuation. ये आपने शार्क टैंक में ज़रूर देखा होगा, जहाँ पे एक फाउंडर अपना बिजनेस आइडिया पिच करता है शार्क्स को और उसके बाद वो अपनी आस्क रखता है. फॉर एग्जांपल, सर माय कंपनीज वैल्यूएशन इज 10 करोड़ रुपीज़ एंड माय आस्क इज 50 लाख रुपीज़ फॉर 5% ऑफ इक्विटी. सो यहाँ पे देन शार्क्स का रिप्लाई करता है, भाई तू बहुत ज़्यादा बोल रहा है यार, इतना नहीं दे सकता मैं तुझे. मैं कितना दूंगा तुझे? मैं 40 लाख रुपीज़ दे सकता हूँ एट 8 करोड़ वैल्यूएशन. सो नाउ if you want that investor to invest in your company at 10 crore rupees, 10 crores valuation, then following things should be there in your company. First, leverage cash flow dynamics. Tell them that, sir, in my business there is strong cash flow, also there is financial stability, because these things builds the confidence in the investors, because this company is having a business which is sustainable, and all these things support the higher valuation. Second, mitigate risk with discounting rates. Sir, in my industry these are the risks which currently faced by the businessmen, and I have considered these risks by applying a right discounting rates. Assess risk carefully and apply right discounting rates. This will reduce the investor fear and lead to better valuation terms. Third thing is highlight growth potential. Emphasize on the market size, scalability and growth opportunities which are there in your industry. Tell them that their industry is going to grow at this rate. Also, currently the business model which I have is a scalable business model which will definitely capture this increasing demand. This will make your startup look attractive and pushes the valuation higher. Utilize comparative analysis. Compare your startup with similar successful companies. Tell them that I have a competitive advantage in the market which will definitely justify this higher valuation. Justifies higher valuation using industry benchmark. And then tailor valuation to the stage of development. Match valuation method to the startup current stage. जैसे हमने पहले देखा, अगर मेरा स्टार्टअप अर्ली स्टेज स्टार्टअप है तो मैं उसको वैल्यू करेगा बेस्ड अपॉन हाउ इनोवेटिव माई आइडिया इज. अगर वो ग्रोथ और मैच्योर स्टेज है तो मैं उसको वैल्यू करूँगा बेस्ड अपॉन रेवेन्यू एंड अदर मल्टीपल्स. So ensure that valuation reflects the true potential and development level. And the last one is align valuation with exit strategies. Show clear future exit plans like IPO or acquisition. This gives investor clarity on return and strengthen negotiation for better valuation. ये सारी चीज़ें हेल्प करती है entrepreneur को at the time of negotiating for higher valuation. Now this is the end of your chapter number 6. If you are loving this video, make sure you subscribe to our YouTube channel. तब तक के लिए टाटा, bye bye, see you in the next lecture.